Hey, welcome back. Based on a new report for the 4 weeks ended July 21st, mortgage rates decreased to the lowest level since approximately February this year. But pending home sales, a measure of buyers getting their offers accepted, posted the biggest decrease in about 9 months. Meanwhile, the share of price reductions is absolutely increasing big time as well, hitting yet another all-time record high for data that goes back to 2015. What's remarkable about this is the fact that price reductions tend to peak in the winter months and not in July. I have a lot to share in today's video. If you guys get any value out of today's video, then please hit the like button. Also help us reach 100,000 subscribers by the end of the summer because we're very close to reaching that milestone. I just can't believe it. Anyways, I appreciate all of your support. Let's go ahead and dive right into the video. I have a lot to share again. This was published from Redfin on July 25th. It says housing payments are falling as mortgage rates are decreasing, but many house hunters remain on the sidelines, with pending home sales posting the biggest decrease in about 9 months. So the year-over-year change, the biggest decrease in about 9 months. That's because sale prices are still very, very close to all-time record highs, making, of course, housing affordability a big challenge. Additionally, some would-be homebuyers are weary of political and economic instability. So please let me comment below regarding that. I have not personally heard that from buyers who reach out to me. A lot of people who are looking to buy houses in the greater Sacramento area who reach out to me, a lot of them as of late are waiting until the fall, winter months, and even to start of next year. But I think that's really due to the fact that we're seeing a rise of inventory. And also we're seeing, still, very close to record high home prices and of course, elevated rates. So a lot of people want to see if the environment is going to move more so in the direction of home buyers or not. But I have not heard regarding any worry about the political and economic status in the US. But please leave a comment below if you guys are concerned about that. So moving on, the typical U.S. home buyer's monthly housing payment was just under $2,700 per month. That was for the 4 weeks ended July 21st, the lowest level in 4 months and down approximately $166 less per month from the record high that was set back in April. Housing payments are falling, of course, because mortgage rates are decreasing, but we're not seeing home sold prices falling very much. We're very, very close to record highs right now. So speaking of mortgage rates, according to Freddie Mac, they post weekly updates regarding rates, the average rates for people with great credit. That decreased to 6.77%, the lowest level since March as inflation is cooling down. Now, speaking of this direction of moving from a strong seller's market to in the direction of a buyer's market, it's not a buyer's market just yet, but we're basically moving that direction. So it says buyers also have more houses to choose from. New listings are up by 6.1% year over year, and more listings are growing stale. In other words, houses are taking longer to sell, giving house hunters the opportunity to negotiate. This all makes sense, right? We're seeing a rise of new listings, even though we're below 2022, 23, and in years past, but we're up compared to last year, which is a positive sign. Also, we're seeing more new listings, or I should say more active listings, which in other words is more houses for sale, rising to at least a 3-year high during the same time frame. But more recently, as I've been sharing with you guys, active listings have actually been coming down, even though they're still up compared to 2023. I'll share that with you guys here in a little bit. Let's first talk about some leading indications. One of my favorite things I like to talk about on the channel. Looking at daily rates as of July 21st, the daily rate, according to the Mortgage News Daily, for people with great credit, I believe they survey people who are looking at, hey, you're buying your first house, you want to live in it. In other words, it's not an investment property. You have a 780 FICO score, and you're putting at least 25% down. If your FICO score is less than that, or you're putting less than that, then your rate will probably likely be more than the 6.9% rate. In any case, at 6.9, that's near the lowest level since February and down from the 7.14% we saw from just 3 weeks ago. Also, we're unchanged compared to 12 months ago. Looking at the weekly rate, according to Freddie Mac, we're also unchanged as well at 6.78%. Let's look at applications for home loans. These are mortgage applications. That decreased by 4% compared to a week ago and down by double digits or 15% from 12 months ago. That's from the MBA. Also, Redfin's Home Buyer Demand Index, which is a measure of requests for home tours and other home buying services from their agents, down a whopping 16% year over year. And by the way, the current level of their index, which measures home buying demand, is at the lowest levels in approximately 3 years, or at least a 3-year low, according to data from Redfin. Meanwhile, people searching for houses for sale decreased by 15% year over year. So just taking a step back, looking at these figures here, we're seeing applications down, Redfin's index down. We're seeing fewer people searching for homes for sale. This is all pointing to buyers sitting on the sidelines, because if buyers were not sitting on the sidelines, they're just buying houses left and right. We would see more people submitting loan applications. We would see more people reach out to Redfin, theoretically, and also more people searching for houses for sale online. But right now, all these figures are basically down by double digits compared to 12 months ago. All right, let's change gears slightly here and talk about some key market data for the 4 weeks ended July 21st. Redfin basically looks at 400 plus US metros. Their weekly data goes back through 2015, and their data is subject to revision. So the stats I'm sharing in today's video will likely be revised in their next week, the next update. Anyways, looking at the median sale price, that's at $395,500. This means that all the houses that sold during this time frame have sold for more than that amount and have sold for below that amount. That's a gain of 4.4% year over year, only about $1,000 shy compared to the all-time record highs set during the 4 weeks ended July 7th. Let's have a look at Redfin's data center regarding this. This 4% rise has basically been paid at 4 to about 5% all year, really basically moving the same direction as 2023 all year. So up by 4% right now. Last year's time, we were up by only 2%. 2022, up by 8%. Look at this though, 21 up by a whopping 20% year over year. So I guess this is good and bad, right? We have near record high home prices, which is bad for home buyers, but at least we're not seeing this, giant surge of appreciation like we saw in 2021. And of course, every housing market is different too, right? So speaking of that, let's have a look at this. So there's only 2 of the 50 most populous metros in which their median sale price actually decreased. That's Austin, Texas, down by 3.6%. Then we have Dallas, Texas, down by 1.2%. So 48 of the 50 metros are up year over year. The biggest gain, Detroit, Michigan, up by a whopping 15.4%. Then we have Providence, Rhode Island, New Brunswick, New Jersey, Newark, New Jersey, and then Milwaukee, Wisconsin, up by 12.4%. Anaheim, California was in the top 5 for months. So I'm wondering where they're at right now. Up by probably less than 12% right now. Speaking of that, let's actually have a look at Anaheim, California. Right now, it's only up by 8% year over year. Whereas in months past, look right here, around the 4 weeks ended June 16th, up by a whopping 17% year over year. And home prices have been coming down ever since then, now only up by 8%. It is a smaller percentage though. Look at the median sold price, just under $1.2 million. At this time last year, it was at $1,078,000. All right, going back to Redfin's report, let's talk about average monthly housing payments of would-be home buyers. Redfin basically looks at the median list price and also the weekly rate according to Freddie Mac. So that has been coming down ever since May, which is a positive sign. But right now, during the same time frame, we're at least a 3-year high right now. So around $2,671 per month to buy an average price home today. Compare that to 2021, your housing payment was approximately $1,600 per month. So you're basically paying $1,000 more per month to buy an average price home today compared to the average price home back in 21. So because of this housing affordability challenge that home buyers are facing right now, this is probably one reason amongst many in which pending home sales are decreasing, down 5.7%. the biggest year-over-year decrease in about 9 months. So we have this affordability challenge, but also we're seeing rising inventory as well, which is all contributing to the softness of the housing market. So looking at the supply side, new listings increased by 6.1%, whereas active listings rose by 18.7%, the smallest increase in about 3 months. So we're seeing a rise of supply, more new listings, and a lot more active listings or inventory levels. Yet, despite more houses to choose from, contracts being signed between buyers and sellers still fell by about 6%. In addition, the month supply increased to 3.6 months, approaching a more balanced housing market nationwide. Looking at Redfin's data center, new listings rose by 6.1%, a little bit less than the 8.6% we saw about 1 month ago, but has been higher than last year all year, but also on top of that, lower compared to 2022 and 2021. This also corroborates with data from Realtor.com as well, because they're reporting that we're seeing more new listings compared to last year, but new listings are still lagging behind. Lagging way behind 2017, 18, and 19, as well as 2020 and 21, of course, as well. So in other words, if you're a home buyer, it's great to see more new listings, but we're still lagging well behind pre-COVID levels. So that's new supply hitting the market. Let's have a look at active listings, or the amount of houses for sale. This is something I've been talking about for a couple of weeks now, because inventory appears to have peaked, because for the past 3 weeks now, inventory has been decreasing on a national level, which is much different compared to the past several years in which inventory was rising. Especially look at 2022. Inventory was absolutely exploding through basically the end of July. And now it appears we have an early peak in inventory levels, because inventory tends to peak in the late summer months and not in June. And because of this, about 3 weeks ago, we're up by about 21%. Now the gain compared to 2023 is an increase of 18.7%. One more thing I want to add regarding this is that if you guys want to see home prices absolutely crater, this is basically moving in the opposite direction, right? We would need to see this kind of go back up like this, similar to what happened in 2022. Inventory exploding, causing price growth or home prices to decrease due to a lot of options for home buyers. But right now, at least for the past 3 weeks, inventory basically moving in the opposite direction. Not to say there's not challenges ahead regarding your housing market. I'm personally concerned about high home prices and still elevated rates as well. So in my opinion, housing affordability is probably the biggest challenge that home buyers are facing right now. All right, let's have a look at pending home sales for each of the 50 most populous metros. So there's only 7 metros in which pending home sales increase in the US, whereas there's about 33 that actually decrease year over year. So those 7 metros that posted gains were Newark, New Jersey, up by 7.1, San Jose, Boston, Cincinnati, San Fran, Los Angeles, and Columbus, Ohio. Interesting too that out of the 7 metros that are up, 6 of them are up by less than 5%. In contrast, look at this: Houston, Texas, leading the nation, up, or should I say down by 28% year over year in the measure of contracts being signed between buyers and sellers. After that was Minneapolis, down by 16%. West Palm Beach, Florida, also a decrease of 16%. Then Virginia Beach, Virginia, and Atlanta, Georgia. Also looking at new listings, the vast majority of the 50 biggest cities have posted gains, and approximately 42 of the 50 are reporting gains. That is San Jose, California, the biggest increase of new listings, up by 25.8%. Then we have Vegas, Miami, Phoenix, and Jacksonville, Florida. In contrast, the biggest decreases of new listings is Atlanta, Georgia, down 14%, Houston, Detroit, Chicago, and Warren, Michigan. Let's have a look at the month supply. How's that compared to years past, going back to 2021? This is from Redfin, of course. I really wish they provide 2019's numbers. But in any case, look at the month supply right now. We're at 3.6 months, at least a 3-year high during the same time frame. It has been increasing, which is normal because the month supply tends to peak in the winter months around December or January and February each and every year. Actually, just looked this up for you guys off camera. Regarding the month supply at 3.6 months, looking at the average June, basically 1 month prior to this, the average June from 2017, 18, and 19 is a 4.1 month supply. Now we're at 3.6 months according to Redfin. So slightly below pre-COVID levels, but approaching that though, because it's about half a month below the long-term averages. All right, changing gears slightly here. Let's talk about days in the market, how fast or how slow houses are selling right now. The median days in the market is at 33 days, which means we're at least a 3-year high right now. Has been higher compared to last year, which is all contributing to the rise of inventory. It has been higher compared to last year ever since really May this year, whereas the first 4 months this year, houses were selling faster than last year, but has basically been selling slower for about 2 months now. In regards to the share of price drops, that's at 6.7% according to Redfin, a new all-time record high. Last week, it also was a record high as well. So a new record high for 2 consecutive weeks at 6.7%. Virtually on par though with back in November of 2022, which was also around 6.7%. 2 more slides I want to share with you guys. Here's the average sale price to final list price ratio. That's at 99.5%. This means out of all the houses that sold over the previous 4 weeks, they sold for 0.5 percentage points less than the seller's final list price. This is much less than 22 and 2021. So for example, back in 2021 this time, houses on average sold for about 2% over asking. Now they're selling for slightly below that at 99.5%. And lastly, Redfin's home buyer demand index is basically tanking. It was kind of moving in a flat direction, but right now down 16% year over year. I mean, easily a 3-year low, at least right now. Obviously, the lower number means that they have a fewer amount of people who are getting requests for home tours and other home buying services from Redfin agents. And of course, a high number like we saw in, when was this? November of 2021. The index was over 175. Now it's at 104. So a big demand or a big increase in demand for Redfin agents back then, whereas right now, not so much. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys want a real estate agent referral, whether you're looking to buy or sell a house anywhere nationwide, please check out my website, which is realestateteamfinder.com. With that said, please like and subscribe and have an awesome day, and we'll see you next video. I appreciate you.